Conglomerate Sime Darby announced it is selling its interest in Ramsay Sime Darby Healthcare to Columbia Asia Healthcare for 5.7 billion ringgit, marking its exit from the healthcare business. Ramsay Sime Darby Healthcare is a 50-50 joint venture between Sime Darby and Ramsay Healthcare. In a statement, Sime Darby said its unit Sime Darby Holdings, together with Ramsay's subsidiary AH Holdings Healthcare, inked the sale and purchase agreement with Columbia Asia. The group said the deal will enable it to unlock the value of its healthcare assets, which have previously been deemed non-core, with a 2 billion ringgit gain on disposal of the stake. Ramsay Sime Darby Healthcare operates 4 hospitals in Malaysia and 3 hospitals in Indonesia. Group CEO Datuk Jeffrey Salim Davidson said, while the hospital business is a great asset, the conglomerate has always maintained its focus on its core trading businesses of motors and industrial. He said the offer from Columbia Asia was one it could not refuse. The deal is expected to be completed in the third quarter of 2024. Sime Darby last traded at RM2.34, valuing it at 15.95 billion ringgit. LTAT has issued an unconditional mandatory takeover offer notice to acquire the remaining shares it does not own in Boustead Plantations for a cash price of RM1.55 per share. The cash price represents a 21.09% premium over Boustead Plantations' net assets per share of RM1.28 and is 1.3% higher than the conglomerate's closing price of RM1.53. LTAT's notice follows the Armed Forces Fund Board's agreement with Boustead Holdings to buy 739.2 million shares, or a 33% stake in its plantation arm, after the 1.15 billion ringgit takeover deal by Kuala Lumpur Kepong fell through last month. The acquisition takes LTAT's shareholding in Boustead Plantations to 976.41 million shares, representing a 43.59% stake. LTAT said the offer represents a significant step forward in its overall restructuring and turnaround of the Boustead Group, and in rebalancing the Pension Fund Board's investment portfolio to better position the fund vis-a-vis the risk-return profile. The offer also provides it greater flexibility in setting the strategic direction of Boustead Plantations and accelerating the value creation plans that meet LTAT's objective. Maxis said net profit for the third quarter of FY 2023 shrank 6.8% to 287 million ringgit due to restructuring charges related to cost optimization initiatives. Quarterly top line grew by 1.5% to 2.44 billion ringgit, driven by its service revenue growth of 1.8%, which was underpinned by steady growth in its consumer and enterprise revenue. The telco declared a third interim dividend of 4 cents per share, bringing the total dividend declared year-to-date to 12 cents. For its FY 2023 outlook, Maxis forecasts its service revenue to experience a low single-digit increase and flat EBITDA. It also expects its capex spending to be slightly less than 1 billion ringgit. Maxis CEO Goh Xiao Eng said the group delivered stable growth in an intensively competitive operating environment and is seeing good take-up of its recently launched 5G and new fibre plans. He added that the telco's priority is to focus on operational excellence and to meet the connectivity needs of its customers. At the close, shares in Maxis were unchanged at RM4.03, giving the group a market capitalization of 31.56 billion ringgit. The Securities Commission Malaysia or SC wants to forfeit a piece of property and shares in Bright Packaging Industry owned by former Asia Media Group MD and CEO Ricky Wong Shi Kai, who is wanted for money laundering. He has been at large since December 2019 and left the country in 2021. The forfeiture of Wong's property came up before Judge Dato Azhar Abdul Hamid in the Kuala Lumpur High Court today. The asset, which is located near the Kuala Lumpur city centre, is said to be worth more than 20 million ringgit. The judge ordered the exchange of affidavits between the SC, Wong and his holding company Havana Bayview by February 5, 2024, after which he will fix a hearing date for the SC's forfeiture application. It is understood that the SC has also filed forfeiture proceedings before Judge Dato Ahmad Shahir Muhammad Saleh for Wong's control of shares in main market-listed bright packaging industry, with the hearing also fixed for next year. Wong and his family hold a 32.94% stake in the company. Ibraco is expected to set up a joint venture company with its China partners, China Railway Engineering Corporation Malaysia and Nanyang Tunnel Engineering, after securing a project related to the Kuching Urban Transportation System worth 568.61 million ringgit. Its subsidiary Ibraco Construction had joined hands with the two entities to participate in the open tender by Sarawak Metro, the implementer of the Autonomous Rapid Transit System project. The tender is for the construction and completion of infrastructure works for Blue Line Package 1 from Rembus to Stutong. According to Ibraco, the project is expected to be completed by December 31, 2025 for Stage 1 and June 30, 2026 for Stage 1A. On the source of funds, Ibraco said the project will be financed via internally generated funds and external borrowings. The job is expected to contribute positively to its earnings and net assets for the duration of the project. Ibraco last traded 1.6% higher to end the day at 62 cents for a market capitalization of 338.55 million ringgit.